Brian, you spent a whole 92 days at Binance US, and I'm wondering here, when you look at the charges they face, the settlements that they've reached at the end of the day with the Department of Justice and other regulators, what's at stake and what are the ripple effects?
Well, Sonali, first of all, thanks for having me. I will say, I think that what's at stake might turn out to be a little bit less than people expected. And I say that because, as you said at the top of the show, crypto prices have gone up, not down. And I think there was a lot of fear in the marketplace that, a settlement or a negative outcome for Binance would somehow dry up liquidity in the markets. What I'm seeing is Bitcoin is at a one-year high today, as you pointed out. Interestingly, the trading volumes on the Binance platform aren't particularly down. I think their 24-hour trading volume as of right now is about $10 billion, which is in line with their post price fall highs. So what it tells me is crypto and Bitcoin in particular have matured to a point where there's no one event, there's no one exchange that's going to collapse the marketplace. That's the good news. I think the better news is that by having some amount of certainty about the current status of the largest exchange in terms of management and board leadership and everything else, maybe we can all settle down and get back to what matters in the industry, which is building decentralized tools, building stores of value, building safe custodians, and all the things that market structure really requires. So honestly, it's a less bad outcome than people might have predicted.
But how is Bitcoin seeing so much love at the end of the day? Some of the charges faced, some of the things that people now know have been quite commonplace in this industry. Terrorist group financing, other illegal activity, drug trafficking. How are people supposed to get comfortable with their exchanges when this type of activity has been coinciding a lot of plain old Bitcoin trading that has been going on?
Well, Sonali, when you say that these are things that everybody knows, there's always a species of when everybody knows something, that's when you should start asking questions. So the general counsel of TRM Labs and I recently published an op-ed on another Bloomberg platform talking about the true story of terrorism financing versus the media reported story of terrorism financing. And just suffice to say, the idea that Bitcoin has played a major role in financing Hamas terrorism or anything else recently is wildly overblown. And that's for a whole bunch of reasons, largely because terrorists have realized that Bitcoin is the most traceable value exchange network in the world. And so it's a very bad place for criminals to hang out. I think what's really going on here is there is increasing belief that we're going to see a Bitcoin ETF approved probably in January. It won't just be BlackRock, it'll be 10 or 11 applicants going global with Bitcoin ETFs. And the way that I think about that is that's like the IPO for Bitcoin. So Bitcoin's been a really interesting growing niche asset for a long time, but when the IPO happens, when everybody has it in their retirement funds, then it's going to be Katie bar the door.
Yeah, just waiting for SEC approval if and when that ultimately comes, Brian. It does seem like the industry is feeling very much like it is a when, no longer a matter of if. A lot of people say it's inevitable. There is, though, an ongoing conversation, and this kind of comes back to what you were saying about the narrative out there regarding terrorism financing. For example, there is a big push now on Capitol Hill in the anti-money laundering space regarding terrorist financing that seems like it has much more impetus and momentum behind it now than, say, the initiative that would have delineated market structure and jurisdiction between the SEC and the CFTC. And I just wonder if, yes, the industry didn't break, but this maybe changed the course trajectory on the regulatory side and not necessarily for the better.
Well, Kaylee, I think you're definitely right that the wind is no longer at the backs of the industry the way that it was 6 months ago, for sure. And what you're talking about, focusing on money laundering, particularly Senator Elizabeth Warren's bill in the Senate to create new AML controls in crypto, is a big deal. But what I think is important for your viewers to understand about that is this AML push that Senator Warren is pushing is really sort of her most recent justification for destroying the industry, but she's had many others. And so I would be skeptical as to whether the motivation for this truly is a worry about terrorism financing when we're talking about the same politician who a year ago launched something called, and I quote, the anti-crypto army. So she's been looking for any justification to take out crypto for quite a while. This is simply the most convenient argument. And again, the true factual foundation of it is wildly overblown. I mean, the Biden administration Treasury Department has reported that crypto is a very small component of money laundering and a much smaller component relative to its size than is the traditional financial system. So I think what's really going on here is there's a political opportunity to rein in an industry that's hard to control, and they're taking every advantage of that, which is bad for the industry, possibly not well-founded in policy.
Brian, put some perspective into the forces that are still riding against crypto in the regulatory sphere and in Congress, because the reality of the situation is there have been a lot of lawmakers talking about a lot of things in regard to crypto. There has been almost nothing that has been pushed forward in a significant way, yet you have voters, you have dollars going into Congress in support of crypto. So really, how much pushback is there really?
Well, I mean, look, we have an election coming up, and I think for the first time ever, crypto is likely to play a real role in certain races. Crypto founders are finally being politically energized. People who previously were apolitical are now fully engaged, and you've seen this. So I think that'll play a role in the next election cycle. What I think is interesting, though, is for people to understand what's really at stake in this discussion, because it's not about, do you like these tech platforms or don't you? It's not like a debate about Uber or Airbnb, which had their own controversies. What it's really a debate about is how much do we want the government to approve and surveil our transactions? Crypto is a threat to that kind of a surveillance state, which is one reason politicians don't like it. What I would tell you is the fight against crypto has a lot to do with a political viewpoint that has said, we want to know where every dollar in the economy is going. And when I say it's been said, this has been said by the chairman of the European Central Bank, by the president of the Bank for International Settlements, and even to some extent by members of our own Federal Reserve Board. The IRS has a rule that they keep postponing that would require reporting of any transaction in any form of currency above $600. So, paying your dog walker or your babysitter might require you to file an IRS Form 1099-K. Crypto is inconsistent with that because crypto doesn't flow through the normal banking system. So the question is, how much of a surveillance state do we want, and how comfortable are we really with financial privacy? That, to me, sounds like a pretty big voting issue, and it's very different from an argument about something esoteric like anti-money laundering rules.
Well, and of course, all of this factors into the CBDC conversation as well. There is a lot of concern about that potentially adding to this surveillance narrative. Just quickly, Brian, before we let you go, considering that you did for at least a short period of time run Binance US, for other U.S. exchanges, is there a market share seizure opportunity here for like a Coinbase, which has been rallying in recent weeks, as Sonali was pointing out earlier?
Well, in the U.S., absolutely. I mean, Binance U.S., during the brief time that I worked there, had a trading volume in the billions of dollars, and it's now essentially fallen off the map, largely because, it's been asphyxiated of fiat rails to the banking system. So you can no longer buy and sell into dollars off of that platform. So the U.S. exchange is largely gone, and what's left is Coinbase and Kraken, which is great news for U.S.-based, U.S. homegrown enterprises. Globally, I have not seen that change. As I said, Binance.com's market share seems to be as high today as it was 6 weeks ago, and that tells you a lot about the unregulated parts of the world.